and welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, I will start by answering a question from the audience regarding forecasts. More specifically, how I want to forecast my portfolio to calculate when I believe I can become financially independent. Next, I will give an update to my portfolio. And finally, I will share a link to an interesting study from Yale University where you can see how a lot of different companies are behaving after the Russian invasion of Ukraine. So let's immediately jump to this new sheet called Forecast. So this sheet is very similar to my dividends tab. You can see all the different months and all the dividends which I have already received. And then you see that the text start to change here, since this is where I start to use the forecast. The Google Sheet has a function called FORECAST.LINEAR. So when you look to this graph, you can see that all the forecasted dividends looks pretty much like a straight line based on my historical dividends. And that is exactly what this forecast is doing. You input the date which you're trying to estimate your dividends from. Then you input all the dividends which you have previously received for each individual month. And then this formula try and forecast how much you are going to receive in each individual month, and you can continue for as long as you want into the future. I have just tried to illustrate this with the graph for the next couple of years, and this is very similar to making a trend line. So if we, for instance, just add a trend line just to show you, you say edit chart, you go to customize, you go to series, and then you say add trend line. And here you can see you have a very clear straight line based on the dividends you have already received. And as always, please remember, all models are wrong, but some are useful. So why haven't I tried to predict my dividends previously? Why am I all of a sudden just starting to do this now? Well, I know that the dividends which I'm going to receive in the future is not going to be exactly the numbers which I'm seeing here. But what it shows you is what trajectory or what path that I'm currently on based on what I'm doing. So if I have to try and come up with a guess on how my dividends will develop, this is definitely a qualified guess. But the longer you go into the future, meaning the more you try to extrapolate your data, the more uncertainty there will be. And since I know that there is a lot of uncertainties to what I will be doing a year or 2 years from now, since I don't know where I will place my investments, the only thing I know for certain is that there is a lot of uncertainty in the future. But since somebody asked me if I could try and make a forecast, I would say this is the simplest way for you to make a forecast. So that was why I wanted to show it this particular way. And just to put a remark on this forecast function in Google Sheets, like any other model, your model becomes stronger the more data points that you can input, meaning the more observations that I have, meaning months that I have received dividends. So every time a month has passed, I should update my forecast for the next month so that I will have a better estimate of what my slope on this line will be, because that heavily affects what will happen 5, 10 or 15 years from now. So if we actually look at the graph here, one major milestone for a lot of dividend investors is to hit $1,000 in dividends per month. And based on the forecast from this linear model, I'm supposed to hit that goal in March 2025. Whether or not that will be the case, we will simply have to wait and see. But perhaps a more important question is, when will I actually become financially independent based on this forecast? So if we scroll quite far down into this model, well, my level 99 goal of reaching $4,000 in dividends per month will happen 20 years from now. Whether or not that will be the case, we will simply have to wait and see. Perhaps I should explain why I say we simply have to wait and see. The reason why I use that phrase is that there is so much uncertainty. I could be unlucky and lose my job. It could also be that I'm lucky and get a salary increase, or perhaps I get a different job which is better paid. I could do some poor investments. I could be unlucky with some of my investments. Perhaps I do a lot of good investments and the portfolio develops much better and much faster. I mean, all these things really matters for the outcome. And I mean, what happens 20 years from now? And is it really important to you if it happens in 19 years or in 21 years? Of course, it matters if it is in 15 years or in 30 years. But as long as you can see that you are on the right path, I think that is actually the thing that motivates me the most. If we then go back to the overview arc here, just to give you a quick update to the portfolio, the first thing we immediately notice is that there was a red circle for this week's episode. If we go to the portfolio values tab, you can see that the portfolio is down $1,300. So I'm down below the $200,000 mark. And after 4 weeks of increasing value to the portfolio, it was finally time for the market to step back and also for my portfolio to drop a little in value. At the same time, you can see that the cost is unchanged, meaning I have not done any new investments in the portfolio. If we then continue to my favorites tab, namely the dividends tab, then you can see this has been quite boring since I haven't received a single dividend. This is also due to the fact that it is Easter, so it has been a short trading week. So I expect to receive some dividends next week. And finally, if we go back to the overview arc and scroll all the way to the top, just so you can see how each individual company has been performing, I think the most significant move we have seen within this week is that Apple has actually dropped around $12 since it hit its all-time high earlier within last week. And finally, I want to present you with this link to Yale School of Management, which have been tracking more than 1,000 companies which are operating in Russia. And what they are doing here is they are showing how these companies are behaving since Russia launched its invasion in Ukraine. Since it is vitally important that we as consumers who do not wish to support the Russian war machine make it very easy for these companies to understand that they should leave Russia. So what they have done in this Yale School of Management is they are grading each company with a grade from A to F on how they are behaving since Russia launched its invasion. F meaning they are operating business as usual, A meaning that they have completely exited Russia and have closed down all their branches and are withholding all new investments in Russia. So this is a chance for you as a consumer to go in and see, can I still buy the products which I usually bought from these companies if I do not wish to contribute indirectly to the Russian war machine? And this is a pretty powerful tool to use because it really allows the consumer to let the money speak and take direct action. And your action speaks much louder than your words. So if you're actually using these hashtags stand by Ukraine or stand with Ukraine, well, the least you can do is let your money do the talking and saying, if you see a company on this list having an F rating, refuse to buy the product. Let your friends know that they should also abstain from spending or buying product from that company and buying from their competitor instead. So you incentivize each foreign businesses in Russia to close down and exit. This is what we as consumers can do, and if we stand united, this is an immensely powerful tool to use on the Russian economy. And as always, you can find a link in the description for this webpage if you want to spend your money with a more clean conscience if you do not wish to support the Russian war machine. And finally, note that the company logos which you're seeing here does not mean that they have an F grading. Please go and take a look for yourself. And I highly appreciate if you will share this with some of your friends, since this really has a big effect. The more people focusing on not spending their money on businesses that continue to operate in Russia with business as usual. So that actually sums it up for yet another exciting week of the Lazy Money Game. So now you have learned how to do a simple linear forecast on your dividends. You have seen where you can spend your money with a more clean conscience when it comes to the war in Ukraine. And if you have made it this far, I hope that you will leave a like on the video. It really helps out the channel a lot. And until I see you next time, bye!